Now adjust the volume control so that the sound can be heard in all parts of the room.
This is the Protect Your Assets podcast.
You get the idea?
Bring me a dream.
It's on the internet.
Make him the cutest that I've ever seen.
Go on.
Give him two lips like
It's like no cheese I've ever tasted.
and tell him that his lonesome
Here's the
nights
Sandman.
are over, Sandman.
Are you working with a financial advisor?
Don't have nobody.
Well, if you are, there are 8 signs that your advisor isn't providing a comprehensive plan. Stick with me today to find out if you're in good hands, or maybe what you hear today will open your eyes that you're missing out. It's all coming up next, so keep it right here. Good morning and welcome to Protect Your Assets. I am David Hollander, your host. So good to be with you this morning. For those of you just joining us for the first time, welcome. You hear the jingle? People around here, they call me the Sandman. That's because I help you sleep better at night by helping you protect what you've worked so hard for. They may throw new laws at you, lawsuits, markets dropping, you name it. We have you covered. We're live in the studio right now. If you have a question, you want to know, where's this market going to go? What's going to happen to interest rates? Did you know that retirees who work with financial advisors typically have more monthly income than those who don't? This was a study came out from Schroders that said that those who work with an advisor had nearly, get this, twice as much income as the average retiree had. But if you're over the age of 50 and have a good amount saved for your retirement, the question you need to ask yourself, if you are working with a financial advisor, is, are they doing a good job? Or is this market, which let's face it, it's floating all over the place. It's up across the board. Are you just getting the benefit of that? Are you actually leaving some money on the table when it matters? Well, if you don't know, what you don't know can hurt you. So today on the show, I'm going to share 8 signs your advisor isn't providing a comprehensive plan. Maybe you're in good hands, or maybe what you hear today will open your eyes and show you that you're missing out on something that you need to think about now before it's too late. You're going to find it here this morning on Protect Your Assets, so stick around. Now, is your current financial advisor doing what you deserve? When I come back, find out. You're listening to Protect Your Assets with David Hollander, the Sandman. That's me. I'll be right back.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to pyaevents.com and signing up for our next free event. That's pyaevents.com. Now back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am David Hollander. People around here call me the Sandman because I help you sleep better at night by keeping more of your money. And right now, that big, beautiful bill passed. There are some huge tax breaks right now in there. And if you've just tuned in, we're talking about the 8 things your financial advisor should be doing right now in light of the big, beautiful bill. These are things you need to know. So when you decide to work with a financial advisor, you are in many ways buying the invisible. They can make a lot of promises, but how much of that's real and how much of it is sales? In many cases, it's hard to gauge how well your financial advisor is doing until after the honeymoon phase, or about 6 to 12 months, has passed. Even then, what metrics should you use to grade them? Often when people think of financial advisors, they think of investments. If your advisor is managing only your investments, you might be missing out on some opportunities, essentially leaving some money on the table. You could always be overpaying in fees since you could receive more services for the same cost. Don't let your advisor be lazy with your hard-earned life savings. While that may seem to be the most objective method, the real value of a financial advisor is more nuanced. As we were talking about earlier, there was a study that said if you work with an advisor, you should have double the income than those that don't. Vanguard and others have put together studies that help quantify the value of working with a financial advisor and found that the extra value could add up to 3% or more based on several categories they used. So in order to achieve the value, an advisor needs to do more than just pick investments in your portfolio. What do I mean? Proactive management in the areas of tax, income, investment planning. That's critical for the advisor to justify his or her fee. Now, since most of the people who come to us are already working with an advisor who is not providing the full range of services they need, and they're not aware of what they're missing out on, we put together our own checklist as a litmus test to help you discern whether you're getting the type of planning you could benefit from. So what is the checklist? Well, let's start out with number 1 to see if your current financial advisor is doing what you deserve. First, ask this question: is your financial advisor a fiduciary? A fiduciary is obligated legally to act in your best interest. That means that when they present an idea to you, they should have done the background work ahead of time to make sure it is truly serving your needs and objectives as you've explained it to them. If you're not sure of why you're involved in a particular strategy, don't be afraid to ask more questions so you feel more comfortable with what they're doing. Next, has your advisor developed an income plan for your retirement that protects a portion of your portfolio from market downturns? We all love markets when they're up, like right now. But of course, at some point, things come down. If you are investing in traditional stocks and bonds in your portfolio, and you're not thinking about the downside, you could be missing out. What do I mean? How did you feel in 2022 when your stocks were down 20% and your bonds were down 15%? The most top of mind issue for most retirees is income. And any income plan that involves withdrawals from investments at risk of loss of principal is subject to this risk. It's called sequence of return risk. What do I mean by that? If your stocks experience a significant loss in value because of a correction, crash, anything else that could go on out there, and you find yourself having to sell shares to generate the income you need that month, it can affect how long your retirement savings will last. And if that loss comes early in your retirement or just before you retire, the unfortunate timing could end up killing the goose you're depending on for steady flow of the golden eggs. Even if your portfolio's average rate of return is favorable. This risk is called the sequence of return risk. So how can you look at the sequence of return risk and how would it affect your retirement outcome? Let me give you an example of how SOR, we call it, affected a retirement outcome. Let's say we have 2 investors, both start with $1 million in a 401k. And their plan is to withdraw $50,000 a year to supplement their other income sources. Over the next 30 years, they experience the exact same average rate of return of 6.3%. But their annual returns occur in the exact opposite order. Investor A experiences 3 down years at the start of retirement, and it nearly cuts his savings in half. Despite several good years later on, he never recovers, and get this, he eventually runs out of money in year 16. Investor B gets off to a better start, and though he has some tough times going forward, after 30 years, he doubles his money to more than $2 million. If they weren't taking distributions, Investor A and Investor B would have the same balance at the end of 30 years. Regardless of the sequence of their returns. But because they were pulling out $50,000 annually, their real rates of return were much different than the average rates of return. Now, we've done this math. We've looked at this. We've seen this happen in real life. And of course, no one can control markets. So how do you control your return and your income when it's going to matter most to you? That's a huge question. If you're not looking at that now before you retire, or you're about to retire, or you just retired, I encourage you right now to take a look at that while you still have time. In fact, I've put together a checklist for you. It's easy. It'll take about literally 2 minutes to look this thing over. I'll send it to you in a PDF right now, absolutely complimentary. And you can look it over and see what you think. Call us right now, 866-PROTECT, to get yours. 866-776-8328. What are you waiting for? Protect what's yours right now. 866-PROTECT. Coming up next, during our popular They Say segment, we will share one huge sign that your advisor is doing a poor job for you, and it could be costing you big next year when it comes to tax time. And later in the show, we'll be sharing more signs your financial advisor is doing a poor job. And if they're being lazy, there's so much more coming up. We'll be right back.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to pyaevents.com and signing up for our next free event. That's pyaevents.com. Now back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. This is Protect Your Assets. I'm David Hollander. And today we're talking about financial advisors. Are you over the age of 50? Do you have a good amount saved for your retirement? Are you working with a financial advisor? How happy are you with them? What could they be missing out on in your planning? Well, what you don't know can hurt you. So today we are sharing 8 signs your advisor is doing a poor job. In the last segment, we covered the first question to ask, which is your advisor a fiduciary? Then we covered the sequence of return risk, and I gave you an example of how 2 investors with the same balance in their 401k, same rate of return over 30 years, one ran out of money in year 16, the other doubled their money after 30 years. How does that happen? Well, it's called when you turn your savings into income, bad things happen. So you better be prepared for that one because it is dangerous. Now it's time for one of our fan favorite parts of the show. This is our They Say segment, where we debunk common myths, half-truths, and sometimes just bad advice that they say.
Who are they? What do they know that I don't? And what are they saying this week? Here's David Hollander, the Sandman's answer.
All right, so here's one they say. They say financial advisors can't give you tax advice unless they are licensed as an accountant or CPA. Is that true? This is really interesting because I've heard this many times, and this is where, again, nuances are important. So let's analyze this, shall we? Put this on your checklist. This is the next one. Does your advisor review your tax return ever or annually? Question mark. Here's what I mean. If your advisor is not looking at your tax return, then are they missing something? Well, yes, because most likely some of your income that is passive, that you're not really aware of, that's just there, is coming from potentially taxable sources. And so could tax-free make more sense for you? Or different types of income where there's depreciation? Like all these sorts of things could help you pay less in taxes. And if you're paying with state and federal taxes, say 30% plus, well, now we start to add up some serious types of return, right? They don't have to be a CPA to see where and how you're paying your taxes. Moreover, they should be reviewing your tax plan, this is important, before the end of the year. And they should take advantage of things that could make sense to you, like charitable strategies. I saw several clients this week who didn't need their RMDs from their IRAs or 401ks. And so we talked about something called QCDs. If you want to know more about QCD, go to the podcast, type in Protect Your Assets QCD. I did a whole show on this. What about a Roth conversion? You've been hearing a lot about it, and you're going to hear a lot more because of the big, beautiful bill that just passed. In that bill, which is now the law, there are several deductions that are available in 2025, like right now. And you've only got a few more months to take advantage of those. And a Roth conversion strategy could be a good idea. But how do you know? Well, how we know is we use software in addition to our team who works together with a CPA. We look at the actual returns and we advise you on ways to do that Roth in a way that makes sense. Don't just take a hammer to it. It's more subtle, okay? So do that. The other thing that you should be looking at right now, which we do at the end of the year typically, is tax loss harvesting. So as I mentioned at the market segment, a lot of people who bought some stocks in April are now up pretty big. Do you take those gains right now? Maybe sell off some things that haven't done so well and neutral those out. Buy back some positions you like. You could. I mean, right now we're sitting at a place where, frankly, I said markets, if we get here, I'm going to be happy, and we're there. So as I made the case earlier, there could be more upside, sure. But right now, things look pretty good. So think about that. All right, what's next on the list? Has your advisor discussed the Social Security, you can write this down, tax torpedo? Any advisor working with someone who's about to retire or who is retired should be well versed in Social Security taxes and be developing a plan to avoid the Social Security tax torpedo. If you are going to receive any income in retirement in addition to Social Security, this would include pensions, RMDs from your IRA 401k, rental income, then planning for this tax is important. And if you're not looking at it or not even seeing how it's going to affect you in the future and developing a strategy, then get this, you could pay up to 50% in tax rates on your Social Security. Next, have they been doing Roth conversions for you? Now, I alluded to this. Now that the big, beautiful bill is permanent and there are more deductions, many forward-looking advisors have been preparing for this by performing annual Roth conversion conversations, taking advantage of lower tax rates to better position their clients for any tax increase that could happen later. Might make some sense now. Like I said, we have tools to help us map this out for you before you do that, because you can't go back anymore. So simulate it. If you give to charities, have they put together a donor advised fund for you? Has your advisor asked you about charitable giving, or have they brought it up in the conversation? There are a myriad of strategies, like I talked about earlier, the QCD. There's also the DAF, starting at age 73, that you can use to save on taxes. How about this one? How often do you meet with your advisor? Are investment returns the main topic of conversation, or is your advisor bringing additional value and proactive solutions to the table? If your review meetings are spent primarily looking at the investment returns of your portfolio, then you could be paying more in fees for just investment advice. Ask yourself, what percent of the meeting is spent looking at the past, and what percent of the meeting is spent planning for all the things that are causing you grief? Are you looking in the rearview mirror or through the windshield? Well, you may be saying, I have an advisor, I'm fine. It's not about changing your advisor, it's about becoming more informed, and it always makes sense to be more informed because you don't know what you don't know, right? How do you get more informed? I have a checklist. It'll literally take you 2 minutes to go through this PDF. You can update your knowledge, just like ChatGPT does. And you can get a copy of this right now by calling us. We're here today on a Saturday working for you. So call us right now. Got Phil and Zach up there. 866-PROTECT. 866-776-8328. Coming up next, it's time for a quick break, but keep it tuned right here because when we come back, we'll be sharing one of the biggest warning signs that you could be facing right now. Keep it right here.
If you missed any of Protect Your Assets with David Hollander, all you have to do is go to pyaradio.com where you can download or listen to our latest shows for free. Just go to pyaradio.com on your computer or mobile device when it's most convenient for you. That's pyaradio.com. Now, back to Protect Your Assets with David Hollander, the Sandman.
Welcome back to Protect Your Assets. I am David Hollander. People around here call me the Sandman, and that's because I help you protect more of what's yours. And so today we're talking about 8 questions that if you're working with an advisor, you should know. And if you don't, just ask them. So far today, we've covered 7 of them. And here's the list real quick. Fiduciaries, sequence of return, taxes, Roth conversions, charitable giving, and of course, tax planning. We only have about 3.5 months left until the end of the year. And as a result of that, and certainly as a result of the big, beautiful bill and all the new deductions that exist for people about to retire, that you need to take advantage of this year before it's too late. This is the last one. It's kind of obvious, but I'm going to warn you, you need to dig a little bit to find out the details of this. So the big question to ask your advisor is, does your advisor have a team that they work with, or is your retirement planner in the hands of only one person? Every advisor has capacity as to how many clients they can serve well. So you can ask them, how many clients do you work with? At the same time, every advisor has areas of strength and weakness. So how many clients they have and how many team members they have will give you a clue into how much of their time they're able to spend working on your plan each year. And more importantly, if something happened to them, this is the big one, who would take over? And how would your plan be executed throughout your life as you're living your best life? If you can positively and confidently answer most or all of the questions that we've been through today, this last one's important because, again, in order for those things to actually happen, the team should be prepared to work with you. Now, we use Salesforce. No advertisement for them. I'll just tell you that it's a great software, and by having a CRM like that, where anybody on the team, on our team, no matter where they're located, could look at that, have an idea of where you are in your planning and what's been implemented, and have that all integrate into your financial plan that updates every night, gets market information daily, all these sorts of things that are very important to know what you're doing are available. And so your office or whoever you work with should be spending money on technology, which is not cheap, but they should be doing it to bring the best service they can to you. And in addition to that, we have multiple advisors who have multiple levels of experience working together as a team. And usually through the team, you can create the dream. And so that's important, particularly if something were to happen to somebody. So remember that. Is it easy for them to pick up and continue on? Find out, ask, go see, go to their office, look at what they're doing, how they're doing, who would step in, how would that work? And if there's a problem there, then, get in front of that. It's not too late. If you're left with more questions than answers after today's show, or you're wondering what it is that your advisor actually does, then maybe it's time to get a second opinion. As they say, you can't get a second opinion from the person who gave you the first. So if you'd like to get a second opinion, or more importantly, if you'd like to get the checklist that I designed to ask your advisor some questions or to see how you feel about retirement or what you're about to do with income, then get a copy of this right now this morning, because we are giving this out via email and a PDF. All you have to do is call us right now, 866-PROTECT. You got Zach and Nick up there answering the phone. Call them right now, 866-776-8328, 866-PROTECT. Get your checklist. They'll email it right over to you and see how you're doing. I'd like to give a big thanks to the Protect Your Assets team for putting together a great show today. My executive producer, network manager, Kevin Renfer. And of course, all my fabulous producers back there, Zach, Nick, Phil, Raph. Thanks, guys, because without my team, I'm just another pretty voice on the radio. You have been listening to the Protect Your Assets show. I am David Hollander, the Sandman. Go out and make the rest of your life the best of your life.
Investment advisory services are offered through Liberty Wealth Management, a registered investment advisor. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. The strategies mentioned are not suitable for everyone. The information expressed does not consider your specific situation or objectives and may not be appropriate for all investors. Past performance is not indicative of future results. To better understand the risk associated with investing and how it reacts to different market conditions, listeners should always consult with their qualified investment professionals, financial advisors, legal or tax specialists, and conduct their due diligence before making any financial decisions or taking any action. The legal information provided on the air is not intended to substitute for callers hiring their lawyers to advise them about personal legal matters. Investments involve risk and, unless otherwise stated, are not guaranteed. Liberty Group LLC paid for the following program, and the host's views and opinions do not represent those of the station or its ownership. California Life Agent number 048569. Persons engaging the services of one affiliate of Liberty Group LLC companies should be aware that each company is operated separately. You're listening to the Protect Your Assets Radio Network.